Good morning, everybody, and welcome to today's webinar. I'm Ben Ormsby, and I'm the Yorkshire editor of the businessdesk.com. And today we'll be considering how this new period of transition that we're entering during the COVID-19 crisis is impacting on businesses and the questions it's raising for both business owners and managers. Over the next 45 minutes, we'll be looking at a number of key themes, including how to forecast and plan in this ever-evolving situation, and the importance of business relationships for continual success. If you have any questions throughout the course of this, please use the Q&A function at the bottom of your screen, and I will try and bring them in to the discussion that goes ahead with our full panel of experts, which I am delighted to say I am joined by experts from Begbies Traynors, who are based across Yorkshire and the Humber. So we have Dave Broadbent, Louise Longley, Karl, Hodson, and Andrew Mackenzie. So I'm going to ask them all to introduce themselves first and to share briefly what they're seeing in their respective areas of work as we enter this new phase. So I'll start with you, Dave, if that's okay.
Morning, Ben. Thank you very much. So I'm David Broadbent. I am the partner that covers the York and Teesside area for Begbies Traynor, specialise in individuals and companies, corporate businesses. What we're seeing at the moment is a lot of inquiries in relation to businesses and what they can do to try and, one, survive the current COVID situation, the lockdown that we're all going through at the moment. Two, how they can obtain funding as well, and that's something that Karl will be picking up on, and Andrew will be also covering as well. And then thirdly as well, people are now starting to ask us questions about what to do post-lockdown, because I think a lot of people are concerned in relation to what level of turnover they're going to experience in this new world that we're going to be in, and Louise will be covering that off as well.
So similar question then to you, Karl, please. Oh, Karl, I'm struggling to hear you. So, hello? Nothing. I'll move on to Louise as we try and fix your mic. So Louise, same question, please.
Yeah, hi, I'm Louise Longley, a director in the Leeds office of Begbies Traynor. I work in the corporate restructuring team. Pretty much like Dave, we're being asked a lot of advisory questions in terms of what businesses should be looking at in terms of the phased return to work, cash flow and forecasting, and basically what the impact is on that. And yeah, pretty much what you would expect in the uncertain times.
Perfect. Right, let's see if we can try Karl again. Fingers crossed.
Yeah, hopefully you can hear me now, Ben.
Perfect.
Great stuff. Yeah, Karl Hodson, a partner within the BTG Advisory, looking after the corporate solutions team across Yorkshire and the Humber. I look after businesses that need finance, and we're seeing certainly businesses asking a lot of questions, certainly about the government support schemes. And we also help businesses with their credit control, and we've certainly been asked a lot of questions on that at the moment. Businesses struggling to get in their debts and collect their debts.
Thank you very much. And lastly, Andrew.
Morning, everybody. Morning, Ben. Yeah, Andrew Mackenzie, partner at Begbies Traynor Group, predominantly operating across the Humber region, be it Hull, Grimsby, Scunthorpe area. We are seeing, yes, a lot of inquiries, as the guys have said, varied sectors, all sectors really. I don't think anything is excluded in the current climate. A lot of uncertainty. A lot of the measures that have been brought in have formed a hiatus, and it's coming out of that hiatus that people are in the false reality, both through social distancing and furlough, where the uncertainty really is, and when measures cease, which is what we'll touch upon later in the webinar.
Fantastic. So I think we'll start then with Dave, because obviously everyone there has said that forecasting is coming in as how do you do it? How do you cope with forecasting, particularly when it's an ever-evolving situation? So yeah, how do we answer that question?
No, thanks, Ben. I think everybody at the moment, I think whenever you speak to people about forecasting, I think the problem that everybody has is, well, where do you start? because you would normally look at your historic trading results. You'd look at what turnover levels we would normally expect to get during the summer months. But if you take, for instance, a pub, restaurant, somebody within that industry, it's just completely different at this moment in time. I think the first thing that I would suggest is everybody's got to take some advice. They've got to speak to the first key point of contact should be their accountant. Sit down with them. They'll have the finger on the pulse as far as the numbers are concerned, the historic stuff. It's very, very straightforward to put together a simple cash flow projection. What you can then do is flex it. So effectively you can say, what if? So just to give you a key example, I was chatting to my father who lives in Spain, and he was telling me that the restaurants over there are starting to open. However, the constraints that are being put under them at the moment is they're allowed to only operate at 25% of the normal coverage. So that gives you an idea really of what sort of level we may be looking at when we're coming back through. What the cash flow does is it's effectively a blueprint for your business going forward. A lot of people say cash flow projection isn't worth the paper it's written on, because who knows what's going to happen tomorrow, let alone know in the next 6 months. What it is, it's a plan. It's basically something, it's a blueprint to allow you to go back to effectively, that's your 6-month plan. You would then every month go back, have a look at your results for that last month, build them back into that plan. The key thing about a cash flow projection as well is in the name, it's cash, because at this moment in time, cash is king. A lot of businesses at the moment are trying their best to raise cash, which Karl will go through, and Andrew will talk about the grant side of things as well. But at the same time, they're trying to recover monies in and perhaps stretch out things. I think there's people aren't aware that the government have done a lot in addition to the furlough scheme and in relation to the loans that they've guaranteed. They've also allowed for a number of deferral for taxes and things along those lines. So when you're putting together your cash flow projection, you're able to build that in to ensure that you've got a decent cash balance there. I think secondly as well, what a cash flow projection does is it shows if you're going to be suffering any lulls, because what a lot of people that we're speaking to at the moment are, without downplaying it, are living in the here and now. Effectively, the staff are getting paid through the furlough payments. They're under no pressure from many creditors. However, that will only last for so long. And what we are desperately trying to do with people and through their accountants is to get them to project forward, to effectively say, what's the pinch point? What are we going to do to try and ensure that our business is ready and set up for when that effect takes place? And unfortunately, as the stats suggest, there are going to be a high level of businesses that are just not going to survive. So I think, again, people just need to prepare themselves for if that's going to happen, how best to deal with it. Rather than just effectively saying, well, at this moment in time, everyone is getting paid, we should be fine. But the cash flow is the key document, really. And as I say, the first thing for people to do is to pick the phone up to their accountant or the financial advisor, the bookkeeper, sit down, put that basis document together, and then start working. But the key thing is to take advice.
Perfect. Well, thank you, Dave. You touched on a really important point there, that government has started doing a lot of support, and obviously it's giving people a sense of security now, but maybe not in the long term. So, Karl, obviously government support has been extended already once. How long do you think that's going to be in place for?
We'd expect to see that in place for quite a while. Certainly in terms of the coronavirus business interruption scheme, they're certainly all in place until the end of this year, certainly November time. So I'd expect those to continue, being in place for a number of months, to try and help businesses. I think the key thing really for businesses is that they're going to need help, as they start to come out of the lockdown period. That's probably where they're really going to need support with cash flow.
So what's the take up of the government support been like so far? So we've had C-bills and the bounce back loans. Now, have you got any stats on that?
I certainly have, yeah. So in terms of the C-bills, so the C-bills was launched at the start of March, and this is obviously the one where the government guarantees 80% of the facility and businesses can get up to £5 million. I guess the key in this one is the fact that the business needs to prove that they would be viable if not for coronavirus. And so far we've seen just over £7 billion go to SMEs. 40,000 businesses have had loans from under the CBILS, an average size of about £170,000. There's new lenders in there, so there's now up to about 70 new lenders, albeit the actual scheme probably took about 1.25 billion last year. There's been some criticisms of the CBILS scheme, but I think you've got to remember that banks have had the same issues to deal with as other businesses. Lenders have certainly been inundated with applications, and in reality the scheme was launched very, very quickly as soon as we went into lockdown. And the British Business Bank, which runs the scheme, have certainly made changes throughout the scheme since launch, and they've also accelerated the new lenders. So under the old enterprise finance guarantee, there was about 40 lenders, and now there's over 70. So they've almost doubled the number of lenders on that. One that's been really successful has been the bounce back loan, which was launched at the start of May. So it's only been going just over two weeks and a bit. There's 17 lenders under that. And this is the scheme that will do between £2,000 and £50,000, which is limited to 25% of turnover. And so the government pays, it's interest free for 12 months, and the interest rates are are fixed at 2.5%. So it's a really good scheme. And so far, there's been over £14 billion worth gone through in just over 2 weeks. So 464,000 businesses have had this facility, average of 30,000. It's 7 quick questions and aiming for a 24-hour turnaround. So we've seen the take-up of that be particularly high. The final scheme, which is for larger businesses, mid-size and larger businesses, has seen 86 businesses get just short of £600 million. And the government announced this week that those businesses, large businesses, will actually be able to apply for up to £200 million in terms of funding.
So away from the government support, have other schemes been able to provide that? So I know we've talked a lot in the past about the Northern Powerhouse Investment Fund and things. So how are they helping to address the difficulties that businesses are facing?
Yeah, so there's obviously, there's lots of different lenders out there who can help. And obviously we're quite fortunate in Yorkshire because we've got a number of regional funders. So you mentioned the Northern Powerhouse Fund, which again have been hugely supportive, trying to help businesses, and certainly those ones that have not been able to get funding through the banks. We've got people like UK Steel Enterprise who are operating in South Yorkshire and parts of Hull and the North East. We've got the Acorn Fund. So there's a number of different types of that. But I think also businesses need to look at different options as well. So it might not just be loan funding. It might be looking at maybe business angel or equity funding. We've seen a number of businesses, certainly in the hospitality sector, look at crowdfunding, where essentially they're almost reward-based crowdfunding. So they're selling off future stays and various other bits to try and get some income in there. But also it's probably having a look at other particular things like can you get a capital holiday on your existing facilities, talking to key suppliers and customers, because they might be able to help. They might see your business is key to them, so they may try and help in a way that they can do. And we're also seeing a number of businesses look at how they can collect their outstanding debts as effectively as they can. We've also seen some grants in there. So, for example, North Face, the clothing company, have been offering £1 million or €1 million worth of grants to businesses in that particular sector, and there's been grants for food aid charities. So there are a number of different types of opportunities out there.
I think the interesting thing that both Karl, you've said, and Dave, you've touched on, is actually it's about communicating with people and getting that and speaking to whether it's your lenders or your suppliers or your accountants. So, Andrew, I guess my question is, how important is it to manage those relationships, during this period?
You can't underestimate the importance of talking to whether it be your lender, whether it be HMRC, whether it be your accountant or other advisors. As Dave's touched on, as Karl's touched on, there are a multitude of schemes available, and that the importance of managing your business plan and cash flow on a daily basis and communicating that with your stakeholders, be it your lender or the Crown, HMRC, or your suppliers, is vital. So you can manage your goals, set agreed expectations between yourselves, i.e. your lender, review your loan agreements with your lender. You know, they're going to expect, you know, you to be having difficulties at the current time. You will have raised funds potentially, so you need to agree and come to an agreement. I mean, saying nothing is not the right answer. Taking advice and speaking is the right answer. Similarly with HMRC, you know, they are offering deferments of tax until the end of June only. That will become payable in March next year. So you need to be forecasting forward. Similarly, if you're self-employed, your tax that's due to be paid in July this year will not due to be paid until January 2021. Again, that, you know, you need to plan for that. They're not gone. They're not grants. These are deferments and loans. So you must manage your business, but also your stakeholders. And there are multiple stakeholders, not just within your business, external to your business. Their expectations of what you're going to do. Your suppliers, your supply chain. You know, you're all interdependent on each other. If none of you pay anybody, the whole thing comes to a halt. So not paying anybody is not the answer. You know, much as people are probably trying to at the moment, it will lead to just wholesale failure of businesses. Touched upon landlords. Landlords, some of their provisions commercially have been removed in terms of forfeiture until the end of June. And I keep going back to this end of June because currently we're at the end of June for procedures being halted. Not the government aid, but other procedures being halted. And the government aid, we're looking now at furlough in September, October time. So landlord, we've got a quarter date coming up at the end of June. You may not have paid your March quarter. So the suspension of action from landlords and other parties, the court system has been not closed, but it's been suppressed in a way of creditors taking action. That will come. So it's vitally important you have a plan and taking advice with regard to that plan from accountants, from business advisors such as ourselves, from your lender in conjunction with advisors is vital. I can't emphasize that enough. Your governance of your business, you know, your staff, it's communication throughout the piece. People have to share risks with each other going forward. Your lender will have to share risks. The landlord will have to share risks. You know, to get the show back on the road, to use a term. I mean, there has to be greater risk sharing going forward. There have to be sensible and commercial decisions taken. You know, linking in retail, link your profit to your rent. That's a consideration. There will be further measures introduced and there will be further help. We don't know what that is going to be at the moment. Nobody does. We know there's been changes proposed through Parliament today to the insolvency rules, which, you know, have been rushed through in months, which would take years to bring through, which gives people protection. So it's just talking to people. Absolutely, Ben. Yeah.
So we've touched on all the sort of people who are out there to help. One of the areas that we've maybe not focused on loads is the local government and LEP support. And I know when we were talking just before, Andrew, you mentioned how you felt that the Humber particularly being very supportive of its businesses and the community. Would you be able to give a bit more information on that? Yeah,
I mean, from day one, I mean, if you're, you know, we're all on using a lot more in terms of communication via this medium. The Humber and Hull City Council in particular, through the whole bid, Humber Business Growth Hub, as I say, which are products of the City Council, have been providing weekly, if not daily, updates about how you access funding, how you access the grants, the loans. They've got to set up a portal. Only today I noticed, or was informed, should I say, by the council through Hull Bid, that they brought in a discretionary loan, only up to £10,000. But we're only, as we continue on a daily basis, people are falling through the cracks. Self-employed at first were falling through the cracks. People who actually aren't registered for rateable businesses are falling through the cracks. So if you're sharing space in an industrial park and your rent and rates is just one payment, you don't get the grant. However, the council and the whole City Council have brought out today a discretionary grant where you can apply. Similarly, if you're a council taxpayer, you're self-employed, you may be working from home, but you run a business, so there's no rateable value. Again, they are going to be dealt with by the Humber area through this portal. Karl's touched on MPIF, and you know, and the whole chamber, the chambers of commerce throughout the entire region. I know West Yorkshire and South Yorkshire chambers are also proactive. I would emphasise though, these businesses had to be viable prior to going into COVID. Many weren't, and that's you know, the money is not there to refinance old debt. The facts are a lot of the businesses were highly geared, short of working capital, had poor credit ratings, and without something miraculous happening post lockdown, social distancing, in terms of equity and restructure, they will probably close anyway, Ben.
Okay,
and that might sound harsh, but that's the commercial reality.
I think it's important that we always have that reality in our minds. But obviously, everything we've talked about now, or so far in this session, has been focused on what businesses have been doing or can do to get them through this lockdown period. As we enter this new phase of people starting to, you know, return to work if they can't work from home, and businesses, you know, having to adapt, how do businesses prepare for the return of furloughed staff and the potential financial impact of that, Louise?
Yeah, I think there's several, well, quite a lot of areas to cover when returning to work. Safety, cost, and more importantly, staff, because I think they may be reluctant to come back to work, some of them. And it's putting things in place. And I think it leads into what Dave said earlier about cash flow, forecasting, and relationships with what Andrew's touched upon. Because, you know, as Andrew said, unfortunately, there are going to be some people hit more than others here. There's going to be winners, there's going to be losers. Turnover is going to drop. There's going to be a cost to ensure that the business is safe in accordance with the government guidelines that have been put in place. I mean, not everything that you can do, such as signage, is going to be a low cost. You know, cleaning regimes that need to be put in place is going to be more cost to that. So I think that, you know, forecasting is key. But what we need to remember as well is that this is a returned phase to work, and there is going to be a lag in time. So you need to start assessing the business now and getting it safe for the workplace, but also assessing those relationships and assessing if you have a supply chain, what can your suppliers do at this point in time? What are they able to supply to you? And therefore that leads on to who needs to be back in the workplace. Because when you know what the future work's going to be, you need to decide who is it right to bring back at that time. So who has the skill set? What is the resource that's going to be needed? Can those employees come back? And I think it's the big picture in terms of that, and finding out what your supply chain, what your customers are going to be requiring in the next month, the next 2 months. How can they achieve their goal, and working together to do that. And the cash flow and the forecasting is going to set out what you believe your future work's going to be, what the costing's going to be. And I think that you've got to bear in mind that where you will be incurring cost, there are going to be expenses that you can save upon. There is a lot more working from home. The professional services network have already realised that they actually can work from home quite effectively. So that in itself could save expense. And it's key, what Andrew touched upon earlier, is deciding who needs to be paid and when, and how you can fit that in your new forecasting. And again, it's communication. Then you may find that the cost of reintroducing the employees back to work might not be as what you anticipate, because some of those workers can't come back to work just yet. They have care responsibilities. And are unable to come back to work, and the job retention scheme is open until October, so that can be used. You've got to, there's a lot of things like transport, getting your staff back to work. As I said earlier, a lot of them are going to be reluctant to come back to work. And again, it's the time lag, and I think it's communication, and you need that plans, those business plans, the phased return to work. That's the government guidance, is that this is a phased return to work. As a business, you need to be able to actually advise your employees and the visitors to your workplace and your clients and your customers that actually it's safe to return to work, and you are actually complying with the government guidance, which is there and it's available. And the Health and Safety Executive have also supplied guidance that's there for businesses to look to make sure they are getting ready for this, and they are making the assessments. And the assessments isn't just about ensuring safety at work, it's an assessment on your employees, it's an assessment on your supply chain, your customers, and including all around everyone.
Okay, so try and focus again on the future. We've talked about it, that there are going to be some failures due to this as a result, but out of every major disruption, it feels like there's also opportunities. So how do you see, business leaders balancing the, in the name of the session, the risk and the reward? And what advice in terms of that would you give people? Perhaps going back to you, Dave, at the start.
Yeah, I mean, as Andrew was mentioning earlier, the insolvency rules have taken a bit of an overhaul at the moment. The key sort of message that the government was pushing was that wrongful trading in particular was going to be fairly relaxed. I think the problem is that people don't appreciate that there are still a huge, potential pitfalls there for people in business. I think one of the key things or key questions that we're consistently asked is, if I borrow some money, can I use this money to recapitalise and pay off all debt? This again comes back to the point that everybody's really said, is the communication side. I think obtaining the appropriate advice at the appropriate time, raising capital is fine. I think the key thing though is to look at that business. I think the global side of things, to be fair to the Chancellor, he has been quite open and honest, and that also has the Bank of England as well, in that they are forecasting there to be quite a swathe of business failures, unfortunately. As Andrew touched on earlier, there's quite a few business. I think the whole, to be fair, the economy has been teetering on a recession even without the COVID situation. It's 10 years since we've had one, and I think unfortunately it does need a flush every 10 years. And there has been various things that have masked that. The COVID situation will unfortunately be the final nail in the coffin for quite a few businesses. But again, I think it's not always doom and gloom. There are recovery procedures out there. This is the thing that people should be aware of. There are voluntary arrangements, administrations, even liquidations where there's something to be salvaged. I think what people need to ultimately look at is, what is the situation now? What's the situation going to be like? Am I going to be able to make it over this period of time? What support am I going to need? And is the business model that I'm using going to be useful going forward? Because I think that the consumer confidence is going to be, it's a whole new world coming up.
So that ties well into a question we've received from Jeff, who sort of says, what do you see, the panel as a whole, what do you see as the critical steps for businesses who have been treading water as a result of it, and asked if it was possible perhaps to have it as a checklist of things that you'd do if a business was coming to you now. Does anyone want to volunteer to go first? Andrew?
Yeah, I mean, what I would do, I'd sit down with my numbers and looking at my prior year's information and try and project that forward. I mean, it depends what sector you're in. It's tricky because some sectors are going to be harder hit than others in terms of your retail and your leisure. In terms of how long social distancing goes on for. Manufacturing will depend on your supply chain, but it's managing your cash flow, and not to sound boring, but it is going back to managing the cash flow and and looking at your staff and the staff numbers you require, and micromanaging your business out of this. It's very sectoral, so you'd probably need specific advice for different businesses, but it's understanding and being very, very prudent. Dave mentioned cash flows. I mean, sensitizing your cash flow on different bases is a very important matter to understand your headroom on a weekly basis. You will have peaks and troughs of cash availability. It's not your profit and loss account. That people get confused. You don't look at profit and loss account. That's a statement in time. You can't spend profit. It's cash. People misunderstand that. I've made lots of profit, but it doesn't figure. So it's understanding your business and your cash management. It's that simple, really. Any supply chain. It depends on your sector, Ben.
Yeah, I mean, it's key. Sorry, Ben. I think it's key as well, just to start with a blueprint of what we call a statement of affairs, which is essentially a very, very rough and ready balance sheet. Because I think a lot of people, that's the first thing when the four of us get approached for advice, similar with our teams, the first thing that you'll do is look at the financial status of that company. Because I think once you actually take a snapshot in time of what the assets and liabilities of a company are, it does bring home what you are going to have to do to get back to a level of normality. So if you're an owner-managed business, bottom line is that business is an investment for you. It's an investment of time and money. And if in the next 6 months, that is going to cost you somewhere in the region of, say, £100,000, because the classic is the furlough payments. It might be that people are perhaps deferring the PAYE and national insurance and using all the money they get from the furlough to cover the staff costs. But there is other liabilities that are accruing over a period of time. So when you get to the back end of the year, there could be a sizable ball and chain that you are dragging around. Very good point that Andrew was mentioning earlier is, it sounds awful, but everybody's going to have to take a bit of pain. I remember doing a seminar about a decade ago in Manchester, and at that point, the sort of the main aspect I was trying to get across, because it was to 100 accountants, was we're all going to have to give some free advice. People are going to have to do that extra level. So it could be a supplier, a key supplier that has to perhaps write off half of the debt to ensure that their customer still remains in existence. It could be that people are going to have to look at much better trading terms. I think the government have effectively forced a lot of the pain onto the banks as well. So the banks themselves are having to take a risk. Karl will be able to explain a lot better than me, but it just appears from a layperson that the banks are caught between a rock and a hard place, in that they are being asked to lend monies to businesses that potentially could fall over. And that goes, of course, against the banking regulations that are in place.
So, Karl, Dave sort of teed you up there, but we've also had a comment that some banks are, there's been delays with banks getting bounce back loans out for various reasons. How should businesses prepare for that, when applying for any for the funding that the government is put in place?
I think the first thing to do is to make sure that you've got all the right information, make sure everything's up to date and it all ties in. I think it's really important that you're as honest as you can be, because it's the only way anybody can help. It's explaining any historic issues, and it's explaining what's happened. The government, under a bit of pressure from businesses, removed the requirement from banks to ask for a cash flow forecast as part of the CBILS application process. But for us, the cash flow is still really, really important. The forecast is important, because ultimately any borrowing that is taken on now has to be repaid back. And if you're going to take that on, you need to be confident that the business can afford to do that. I think in terms of any of the cash flows, I think you need to make sure that the assumptions behind that are clearly sort of stated, because if you're a restaurant, you plan to start and you've got certain timescales, you've got maybe capacity issues, you need to clearly state why you've done what you've done in the forecasts. I think you need to build in there any sort of VAT deferrals. Remember, they've still got to be repaid as well. And I think the key thing then is making sure you're taking as much advice as you can. There's the accountants, there's the chambers, there's an awful lot of source of help there for businesses.
I think that's the important thing, isn't it? Knowing that the help is available. Again, we touched on, well, Andrew touched on it earlier, that sectors are being affected quite differently. Does anyone want to put their neck on it and say the sectors they think are particularly going to be hard hit? Obviously, retail feels like the obvious one, and we've all heard that it's the death knell of the high street.
Construction, Ben, in particular. I think that's the one that's now, because Boris in his last very confusing speech, bless his cotton socks, started telling people that if you can go back to work, then you should go back to work. And I think construction was one of the driving ones that they were trying to get people to do. I think the issue there is that the construction is always on a bit of a knife edge. And I think that being perhaps forced into a situation, Louise was absolutely on the nail in relation to the health and safety side of things. You know, if you've got a bunch of subcontractors working on a site, how do you make sure that they are properly separated out? How do you make sure that various other aspects are dealt with as well at the same time? But I think that's one. The other, as I was driving into work today, was I think what a lot of businesses are going to find difficult, and it seems to be that the nurseries now are the ones, because they're getting pressed to reopen and take the kids back in. And it appears that there isn't a huge amount of guidance other than you're going to have to do it. And you're talking about people trying to, herd cats at the end of the day. These are tiny little tots that don't have any idea about the social distancing rules, yet they're being told to do it. And a lot of these private nurseries just haven't, as Andrew pointed out, some of them haven't had the financial support that they need, but are being told you're going to have to do it. You're going to have to get back in. And that, I think, is comes back to the example I gave before about the restaurant. You can open, but you can only have it 25%. It's like pushing you in a ring with a boxer and then tying one arm behind your back. It's very difficult. So, as I say, construction, retail, without shadow of a doubt, the leisure industry, they're the ones I think that are going to get it
as well, Dave. Accommodation, those are the main ones. But then you've also got to look at the ones that haven't hardly ever been affected at all. And you've obviously got your information and your communications, utilities, waste management. So I think that what we need to look at is how those businesses that are still able to grow can assist those and support those areas that are struggling. Whether that's some debt forgiveness for those that it's something that they are going to have to look at. We're changing the way that we work, the way that things are happening.
It's also you've got to think as a business, if you're reliant coming out of this on discretionary spend, discretionary income, big ticket items, be it automobiles, whether we're using cars for getting out of work anymore, fleet providers of vehicles, jewelers, your restaurants, your bars. There's going to be a spike in unemployment. We all know that. Bank of England say it won't recover till 2023. So these businesses are reliant on selling discretionary spend, not your supermarkets, not your food. There'll be opportunities for other people, independents, health and safety, training, IT, cyber security. There's a huge tourism in this country should do well if we can't travel abroad. There's huge opportunities. And as a country, and let's be positive, we are really resilient. We are entrepreneurial. People will find opportunities and will bounce back. Let's not be negative. There will be winners and losers, but that's economics. So I just want to try and emphasise a positive that there will be winners.
I think the other thing to bear in mind as well is there's nearly 7 million people on the furlough scheme, and they expect about 1 million of those people not to be re-employed. So I think again that's an aspect that the government are going to have to do something about. They're going to have to gear themselves up, and also as the individuals themselves or perhaps the business owners, it's starting to now look at those staff, look at your team, look at the people that unfortunately you're just not going to be able to keep on board. Perhaps giving them the opportunity as well to actively seek employment elsewhere. Again, the furlough scheme is a brilliant idea. I was chatting to Emma about this last night, that it's difficult to to try and deal with the furlough scheme without trampling all over the employment law and the Employment Act at the same time, because a lot of people think it's a given. You can just simply put all your staff on furlough and dictate whatever you're doing, but it doesn't work that way. So again, comes back to the point we were saying earlier, that people have got to take the appropriate advice. The people I can see being incredibly busy going forward are going to be employment lawyers, without shadow of a doubt.
Yeah.
You know, if you don't go through the correct process, if you're employing more than 20 people, if you are, you know, it could just be the mix of people that you've got as well. Andrew picked up on the point earlier about people wanting to work from home. You know, there's going to be a whole different change. But as an employer, you need to take the appropriate advice and make sure that you don't do anything that is going to land you in hot water at a later stage.
I mean, there will always be a requirement for an office, but probably smaller, so people can collaborate and integrate. We were doing a lot more with Zoom, you know, Teams, everything else. We've all advanced a pace in terms of technology, and technology will win. And similarly, climate, the impact on the environment has been great from this, and that will continue, I think, now, with people questioning the requirement to move around and fossil fuels. I mean, particularly in the Humber with the renewables sector, your hydroelectricity, your solar, your wind power, with Siemens and everybody else down in the Humber estuary, things will advance along those lines. And I don't think people, certainly as a social conscience, want to go back to unnecessarily driving in to Leeds or Hull or York in a diesel car, which are being phased out, granted, and polluting unnecessarily. So, you know, I think that's just the way things. I think things will change, not maybe dramatically going forward forever.
And I think that's ultimately the outcome, isn't it? The end of this is going to be a new way of doing things. But ultimately, if we look back at where we started this discussion, you know, what do businesses need to do? I think we're all, or at least our panel, are all in agreement. It's all about communication and cash. You know, make sure you are communicating at all levels of your relationships, and make sure that you know where the money is. That is sadly all we've got time for today. There will be a write-up of this event along with videos available on thebusinessdesk.com in the coming days. Thank you all for joining us, and I hope to see you all again at future events. Thank you very much.